All right, let's break down this trade, ladies and gentlemen. So, wait, let me connect my mouse first. It's connected. Yeah, it's connected. Why the hell is it not working? Yeah. All right. So, let's talk about this trade right here. Now, if you remember the analysis, what was the analysis? The analysis was very simple that if price breaks below this, we are going to go ahead and scalp, right? Now, in fact, if you look at it, this was also a very beautiful scalp trade. Let's say if when the price took down this low, you could have kept a stop loss right above this candle and you could have still made around 1:1.6. But again, that's not what we want to do. So how did I identify this was a fake out? So there were quite obvious reasons. The very first obvious reason was that, now if you remember, I've given you an example multiple times that if you throw a ball with very high force at a wall, what is going to happen? That ball will bounce back, right? If I throw a ball, a tennis ball, at a wall very hard, it will bounce back. But if I throw a tennis ball at a wall from a very short distance and very low force, the ball will not bounce back. It will just drop right where it touches the wall, right? If you understand what I mean. So if you look at this, the distance traveled and the volume was very high. So what we're doing here is we are basically throwing the ball extremely fast and extremely hardly on the wall, which is basically the support region. What's going to happen? It is bound to bounce back, right? But let's say if the move was something like this, if the move was something like this, and then this, then I would not even think about calling this as a fake out, right? So first of all, this was a move which was traveling from a very far distance, so it was bound to bounce back from a support region. That's one. Second thing, if you look at it, if you go to the 1 hour time frame, look at this rejection right here. So this level, exact level, is also a rejection on the 1 hour time frame. So basically what happened, price just dumped hardly, and it dumped all the way into this particular higher time frame rejection, and from there it started to bounce back. So now this was the support that got broken. So now I was just waiting for a break of structure. The break of structure happened right here. Now I made a couple of mistakes with this trade because first of all I was not so confident with this trade, because as you might know, this is not my usual style of trading. Yeah, this is not my usual style of taking trades, not my usual style of executing the trades. So I was personally not very confident, so I entered a very small position of 5 lots. I entered somewhere over here, which was according to me a little early entry. I should have entered when this candle would have taken out. I entered a little early. One mistake. Second mistake was that I should have kept my stop loss a little bit higher, somewhere here. Initially I kept my stop loss a little lower. So those were my 2 mistakes. But the best part, like I said, guys, see, I was not confident, but I still entered with a little amount of money. So even if I would have lost this trade, I would have lost only around maybe $500. But again, I was not fine with losing $500 also on this trade because I was not confident. So what did I do? I exited half of my position here because I was not getting that confidence. I did not exit the full position out of fear because, like I said in the last doubt solving session, if you exit full, you are running away from that emotion. You are running away from that feeling. What you need to do to become a better trader psychologically is exit half to satisfy your urge and let the half run to face that fear, to face that feeling, right? So I exited half here and then I let it run. So my trade looked something like this. So I entered right here. I kept the stop loss here, but later on I trailed it over here and my target went almost 29, which is almost a 1:3.5 risk to reward ratio trade. So if this trade would have went in a loss, I would have lost around $250, which is like 0.25% of my account. But this almost made me $1,000, which is 1% of this particular account that I'm giving you a demonstration of. So ideally the entry should have been here and the stop loss would be here as well. And if you ask me, the target should have been somewhere here. So this was actually a 1:5 trade almost. But again, This is not my usual style of trading. This is not the usual setup, but I was pretty confident about it, so I executed with very less quantity, and that's how I captured this particular fake out. So sometimes you need to have that presence of mind to understand what exactly the market is doing, because yeah, you were waiting for the support to break, but that support is breaking in a very different way than you want it to break, right? You want a support to come down, consolidate, and then break. That assures you that the breakout is going to happen and the breakout is going to come. But what is happening here? The price is traveling from a very far distance. It is bound to bounce back, and that's exactly what happened. So it broke the support, went down. I knew for a fact this would not sustain here, and that's why I did not take a sell side trade. I did not scalp either, because it straight fell into a 1 hour rejection. From there, as soon as it broke structure, this would be the perfect entry, this would be the stop loss, and this would be the target. That is a beautiful 1:4 RR trade, and that is the breakdown.